Good morning, everyone. Welcome to the market opening bell for Tuesday, November 18th, your 10-minute guide to the stock market. The Hang Seng Index opened 130 points lower on Monday. In the early session, the decline narrowed to just 40 points, pushing the index to an intraday high of 26,531 points. After lunch, selling pressure intensified and the loss widened to as much as 320 points, with the low reaching 26,252 points. For the full day, the index fell 188 points or 0.7%, closing at 26,384 points. The X-share index dropped 69 points, also 0.7%, to finish at 9,328 points, while the Hang Seng Tech Index declined 55 points or 1%, ending the day at 5,756 points. Total market turnover amounted to 217.6 billion Hong Kong dollars. Southbound Stock Connect funds recorded a net inflow of 8.448 billion Hong Kong dollars into Hong Kong stocks. The largest net purchases included 3.727 billion into the Tracker Fund, 2.071 billion into Alibaba, 280 million into Xiaomi, 247 million into Meituan, and 219 million into PopMart. Southbound funds have now bought Xiaomi for 14 consecutive days, with cumulative purchases reaching 9.807 billion Hong Kong dollars, and Alibaba for 3 straight days, totaling 5.742 billion. From a technical perspective, the Hang Seng Index briefly dipped below its 20-day moving average around 26,292 points yesterday. Should the index close decisively below that level, the next downside targets would be the 26,000 point psychological mark and potentially the unfilled upward gap from November 6 between 25,980 and 26,061 points. On the mainland, the three major A-share indexes opened between 0.05% and 0.5% lower and drifted downward for most of the session. The Shanghai Composite closed at 3,972 points, down 18 points or 0.5%. The Shenzhen Component Index finished at 13,202 points, down 14 points or 0.1%. And the ChiNext Index ended at 3,105 points, down 6 points or 0.2%. Combined turnover on the Shanghai and Shenzhen markets total 1.906 trillion yuan. The renminbi midpoint rate against the US dollar was adjusted upward by 9 pips to 7.0816. Alibaba officially launched its Qianwen large language model yesterday, making it completely free and open to the public as the company makes an all-out push into the consumer-facing AI market. Alibaba hopes to take on ChatGPT directly by offering the service for free and deeply integrating it with everyday life scenarios and ecosystems. However, on the very first day of public testing, the platform was overwhelmed by a massive influx of users, causing congestion and temporary service interruptions. Bilibili held its 2025-2026 Chinese animation lineup announcement last Saturday, unveiling 40 domestic animation projects. Among the highlights, Bilibili is collaborating for the first time with Suzhou culture to adapt the popular Jinjiang novel, I Clean Up Trash in the Post-Apocalyptic World, into an animated series. New trailers were shown for classic IPs such as Chinese Paladin 4 and Hard to Coax. The Legend of Luo Xiaohui is returning after a 4-year hiatus with a new preschool arc. For continuing series, the next season of the year-long A Record of a Mortal's Journey to Immortality is scheduled for the first half of 2026. Link Click Season 3 will air in October 2026, and Chinese Strange Tales 2 is set to premiere on January 1st, 2026. Several major automakers released their third quarter results. XPeng reported total revenue of 20.38 billion yuan, up 101.8% year-on-year. Net loss attributable to shareholders narrowed to 380 million yuan from 1.81 billion yuan a year earlier, with basic and diluted loss per ordinary share at 0.2 yuan. Deliveries, revenue, and gross margin all hit record highs, while the loss continued to shrink significantly, marking an important step in the company's shift from pure scale expansion toward profitability. Chairman and CEO He Xiaopeng outlined the 2026 product roadmap. 7 new one-car dual-power models equipped with super long-range extension will be launched next year, greatly expanding XPeng's addressable market. In the first quarter of 2026, 3 super long-range electric and extended range models will debut, addressing the core pain points of current extended range vehicles with longer pure electric range and 5C ultra-fast charging. Throughout 2026, 4 additional all-new dual-power models will be introduced, including the brand's first entry into a key segment, aiming for rapid breakthroughs and more blockbusters hits similar to the Mona M03. Leapmotor announced third quarter revenue of 19.45 billion yuan, up 97.3% year-on-year and 36.7% quarter-on-quarter, surpassing expectations of around 18 billion yuan, driven mainly by higher vehicle and parts deliveries. The company posted a net profit of 150 million yuan, swinging from a 690 million yuan loss a year ago, although it was slightly below the second quarter's 160 million yuan due to higher expenses and lower other income. Thanks to scale effects from rising sales, ongoing cost management and an optimized product mix, the gross margin rose to 14.5% from 8.1% a year earlier and 13.6% in the second quarter, showing a market improvement in profitability that comfortably exceeds the roughly 12% average among new energy startups. The full-year delivery target has been raised to 550,000 units, with revenue expected to top 80 billion yuan. Chairman Zhu Jiangming recently posted that Leapmotor achieved its original 2025 target of 500,000 units, 45 days ahead of schedule, and with several new models including the Lava 5, D19 and A10 ready to launch. The company is now targeting 1 million deliveries in 2026. Geely Automobile reported third quarter revenue of 89.192 billion yuan, up 27% year-on-year and beating market estimates of around 85 billion yuan. Profits attributable to owners rose 59% to 3.82 billion yuan on sales of 761,000 vehicles, a 43% increase. Subsidiary Zeekr recorded revenue of 31.562 billion yuan, up 9.1% year-on-year and 15.1% quarter-on-quarter, with gross profit of 6.046 billion yuan. Its loss narrowed year-on-year from 2.115 billion yuan to 803 million yuan, though it widened from the second quarter's 394 million yuan. Geely Group's overall third quarter sales exceeded 1 million units for the first time, with new energy vehicle sales soaring 114%, far outpacing the industry average of around 50%. Brand consolidation is clearly delivering synergies, and Zeekr's losses continue to shrink. Speaking of which, let me introduce Phillip Securities' latest promotion. For new Phillip clients who open an account on or after November 1st, 2025, when buying the same stock code on the same day, regardless of the amount or number of transactions, the commission is a flat 50 Hong Kong dollars. This rate applies to all products listed on the Hong Kong Stock Exchange, including ETFs, callable bull and bear contracts, and warrants. The technology sector came under renewed pressure, tracking U.S. stocks lower on Monday. The fear gauge VIX surged 2.6 points or 12.9% to 22.38. The Dow at one point fell as much as 717 points, or 1.5%, and ended the day down a sharp 557 points, or 1.2%, at 46,590. The S&P 500 closed down 61 points, or 0.9%, at 6,672. While the Nasdaq finished 192 points, or 0.8%, lower at 22,708. The Nasdaq Golden Dragon China Index, which tracks Chinese ADRs, dropped 95 points, or 1.2%, to 7,760. XPeng guided for Q4 deliveries of 125,000 to 132,000 vehicles, representing year-on-year growth of approximately 36.6% to 44.3%, and total revenue of 21.5 billion to 23 billion yuan, below market expectations of around 26 billion yuan. Its US ADR fell 10.3%. Alibaba launched an upgraded version of its Qianwen chatbot app in China, and its ADR rose 2.5%. Nvidia, which will report its fiscal third quarter results after the close on Wednesday, dropped nearly 2%. Apple was reportedly searching for a successor to CEO Tim Cook, sending its shares down 1.8%. Berkshire Hathaway disclosed last Friday that it had taken a new stake in Alphabet worth $4.3 billion, making it Berkshire's 10th largest holding and pushing Alphabet stock up 3.1% against the trend. Tesla gained more than 1% against the market after several investment banks expressed optimism about the potential of its autonomous robotaxi. Bitcoin fell more than 2%, slipping below $92,000, reflecting cooling risk appetite in the broader market. Lagged economic data will be released gradually this week. White House economic advisor Kevin Hassett said the labor market is sending mixed signals and may be slowing as companies find that AI is boosting employee productivity to the point where they don't necessarily need to hire fresh college graduates. That's the roundup for today. See you tomorrow at the open. Our stock pick today is ZYLOX TONBRIDGE Medical Technology, stock code 2190. Despite facing numerous industry challenges, ZYLOX TONBRIDGE Medical Technology continued to maintain rapid growth, achieving a 31.7% revenue increase in the first half of 2025 to 481 million yuan, primarily driven by its product portfolio and growing recognition from clinicians. The company recorded IFRS net profit of 121 million yuan, a substantial 76% year-on-year surge. Currently, the group has launched 50 products in the Chinese market, solidifying its leading position in the neurovascular and peripheral vascular interventional medical device sectors. Since the launch of one of its flagship products at the end of 2020, the group has built an extensive distribution network in less than 5 years, covering over 3,000 hospitals and with more than 1 million medical devices used in clinical practice. By product segment, 63.3% of interventional product revenue came from the neurovascular interventional business, while 36.7% was from the peripheral vascular interventional business. In the first half of 2025, neurovascular interventional product sales rose 25% year-on-year, driven mainly by strong growth in mature products and the nationwide rollout of relatively newer products following the mass central procurement by hospitals, and ongoing efforts to enhance product penetration across hospitals at all levels. Peripheral vascular interventional product sales surged 46.2% year-on-year, fueled by continuous efforts to expand market access, improve hospital penetration, and grow the distribution network. This led to rapid sales increases in mature products as well as the nationwide commercialization of newer product lines. Survey data indicates that the global peripheral interventional market is approximately 10 billion US dollars, with China accounting for 12 to 15% of the global market. The global neurointerventional market is around 7 billion US dollars, with China representing 15 to 20%. This highlights significant international opportunities. Currently, the group sells 22 products across 27 overseas countries, regions, and continues to deepen its presence in Europe, further penetrating markets in France, Germany, and Italy, while expanding into emerging markets such as Brazil, India, and South Africa, achieving relatively rapid growth. The group is actively engaging with local partners and has established strategic collaborations with over 60 local partners, with channel coverage spanning 52 countries and regions. The group is fully committed to expanding its overseas markets and accelerating its globalization strategy. Recommendation: buy at $27, target $30, stop loss $25.50. I do not personally hold the above stock.